Well, joining me now for her insight on this big market sell-off, the relationship between the market and the economy, Heather Zumaraga. She's with Vision 4 and Senior Vice President. Heather, good to have you with us.
Hi, Lou.
It takes some thinking to consider when last we saw a 700-point move down, a 700-point move up. This was a powerful, explosive day on high volume.
Yes, it was. It's very unnerving for the average retail investor when you have over 3% swings in the S&P or the Dow Jones on a daily basis. Now, remember, the markets were closed yesterday, so we opened lower and then led. We just fell out of bed down 800 points again like we were on Tuesday, I think because of two things, because the Federal Reserve is raising rates. You have to mention the arrest of Huawei CFO, and you also have to mention algorithmic trading. There are these computers that these hedge funds run these
Program
algorithms.
trading.
Yep, and they just exacerbate the selling on the downside, Lou.
It is the clearest example, though, I've seen of how just absurdly wrong the business press has been about what it is emphasizing as the monolithic reason for the movement of these markets. Today, on the way down, it was again the canard about trade tensions and unsettling uncertainty amongst investors. And then as the market exploded, rebounding to all but 79, 80 points, on the basis of holding interest rates steady on the part of the Fed, just the suggestion that they would. I think people are going to start paying a lot more attention to interest rates, to the Fed, to economic growth and to earnings than they are the nonsense about trade, don't you?
It does. It does really matter. The Federal Reserve raising interest rates has been in the forefront of most investors' minds.
Right.
So it doesn't just put the average investor watching to sleep at night. It's very important because that means your borrowing costs are going to go up and corporations have to pay more on the debt they've taken out. We've had 9 years of easy monetary supplies supplied by the Fed at near zero rates. And now, because the economy is booming, Lou, we have to raise interest rates because there's growth in the economy and unemployment is very low right now.
And folks my age would appreciate a little higher return for the money they set aside over the course of time. This is a president who has been absolutely prescient on the economy. And so many, frankly, I think in the business press have had it so wrong, talking about the independence of the Fed as he talks straightforwardly about the import of rates. When they, by the way, the very people criticizing him for talking about the damage done to a prosperous economy by high rates without economic conditions that would rationalize them, they were the very ones who should have been talking about stabilizing rates and not raising them. Instead, they're criticizing the president because there's some sort of mass psychosis at work in this country that prompts them to do so. What do you make of it?
Yeah, I think that President Trump does endure a headwind despite the great economic agenda coming out of Washington here because of interest rates rising. But that has to happen, Lou, if there's growth in the economy. That's actually a positive for interest rates to go up, and that will help older people who aren't millennials, not necessarily you, Lou, but it will help you in your savings account, in your retirement, in your CDs, that you don't have to rely on a very volatile stock market for returns.
Yes, but that would be following the market. What we saw in October and with the Fed chairman's remarks on October 3rd, was he was saying that there are going to be more interest rate hikes, and implicit within what he said then, irrespective of economic conditions. And we saw what happened when Janet Yellen did the very same thing at the onset of her term as Fed chairman, talking tough, jawboning rates without a market that was either following or leading her. In point of fact, she turned out to be wrong, just as Jerome Powell did this time. I always thought that she'd have been a good Fed chairman for this president because she had already learned his lesson. It appears, and I think we can applaud Jerome Powell, he appears to have learned his lesson as well. Do you agree?
He has softened his tone, and since that October 3rd statement that he made, as you alluded to, at first initially he was saying we're far from normalized rates, meaning that interest rates should be closer to 3 or 4%, at least a historical average, given the growth in the economy. And now he's walked that back a little bit. I don't think it was necessarily because of President Trump's tweets.
Oh, I don't either.
I think it's just because he's seeing that, okay, let's do this at a gradual pace. Raise a quarter basis point now, and then maybe next year we hold.
Heather, thank you so much.
Yes, sir.
And unlike you, I'm sure it was because of President Trump.